Alright everyone, today we are zooming in on Chainopera AI. Yes, the token ticker COAI, which has been riding one of the wildest roller coasters in the crypto space lately. Right now it's trading around $1.60, and yes, it's down about 14% in the last 24 hours. But before we call it a wash, let's rewind and dig deep into what's really driving COAI, what recent updates are stirring the market, and whether this could quietly be gearing up for another major move. Chainopera AI is not just another meme or hype coin. The project's premise is built on combining blockchain with AI infrastructure, decentralized AI agents, community-owned models, and a full stack that includes model hosting, data analysis, and agent monetization. According to its white paper and tokenomics, COAI is the native utility token for this network, powering access, governance, staking, incentives for model creators and data providers. Now, COAI's recent history has been wild. The coin earlier surged dramatically, from modest levels into double-digit territory, riding the AI plus crypto narrative in a big way. But that kind of parabolic rise came with heavy risk. What we are seeing today, the drop to around $1.60 and the recent 7-day losses, is part of that cycle. There's profit-taking, there's narrative fatigue, and there's the ever-looming risk of token unlock schedules or large wallet holdings which can create massive volatility. So what are the recent updates and news that matter for COAI now? First, the project has been listed on major platforms and made itself more accessible. For example, it was announced that COAI would be available on Binance Alpha and Binance Futures around September 25th. That move gives exposure and liquidity, which is always a positive. Also, the project claims over 3 million AI users and 300,000 BNB pairs within its ecosystem, which the market has interpreted as big user growth potential. On the development front, Chainopera has been working on its AI term, and the infrastructure layer for agents, GPU hosting, data model deployment, a complex undertaking, but one that could generate real utility if executed. On the other hand, there are very real concerns. One of the big red flags in recent reporting is how concentrated the COAI token supply is among top wallets. Some sources claim that the top 10 wallets hold around 87.9% of the token supply. That level of centralization means a single large sell order could trigger cascading liquidations, especially in a token with high volatility like this. Another concern is that some analysts have described COAI's price action as resembling a pump and dump pattern, because while the technology narrative is strong, the execution is still early and very speculative.